this chapter finished up today, and then we'll have, excuse me, some time to go through probably some homework problems. So let's do a quick review of where we are and what we have left to do. Okay. So today is the 15th. We're going to finish up chapter 5, then we're going to start on chapter 6 on Thursday. Remember, next week we're not going to meet. You do still have homework due on that Tuesday evening, though, so don't forget about that. Get that done, and you'll be able to enjoy your Thanksgiving. And then we'll have 2 more days talking about chapter 6. So that'll be the week after Thanksgiving, and then the week after that is our last week of meeting. So on, where are we here? This should be Tuesday, I think. Yes, that should say Tuesday. Sorry. Tuesday, we will do some review for both the final exam and for the comprehensive exam. This is both of those cover all 6 chapters. And then the following Thursday, 8th, you're going to take that comprehensive. It's kind of messed up. What did I do here? Oh, there it is. I'm sorry. So we're going to do the assessment exam in class. It's 60 minutes long. So if you need to, obviously we've got an hour and a half class, so we can do some review, additional review beforehand if you need that, or you guys can just kind of head into the exam, and then once you're done, you're done. You can leave. And then our final exam, it is going to be, I'm going to change that. It is going to be on your own. It will be proctored, however, so you'll have to use the Respondus system, or if you don't want to do that, you can make we can make arrangements for you to do it at a testing center. Okay, and it will be due then during that, or it'll be due by 1:15 on the 15th. But I will give you more time to complete it. So if you want to do it earlier than on that Thursday, you can certainly do that and be done. It's still a 2-hour test, so once you get started on it, you have to finish it within those 2 hours. But any questions on the schedule? And we'll go through it again as we get closer. Nope. All right. Let's finish up chapter 5. All right, so the FUTA return. I think we're gonna, they don't really give you an example in the slides of the FUTA return. So I'll pull up a copy of that. I think in your book you've got some pictures of what they look like. And it looks very similar to the 941. It's called a 940 instead of a 941. Unfortunately, it's with those numbers being so close together, it's easy to get them mixed up. But the 940 is the form that we use to report our FUTA tax liability. It is due, it's only filed on an annual basis, not on a quarterly basis like the 941. So that is a difference between those two, another difference between those 2 forms. It's due by January 31st of the following year. So the 2022 FUTA form 940 will be due by January 31st of 2023. Now, that is assuming that January 31st falls on a business day. I don't know if it does or not. Yes, it does. So it falls on a Tuesday in 2023, but if it happened to fall on Sunday, then it would be due February 1st, the following business day. If it fell on a Saturday, it'd be due February 2nd. So just like every other deadline that the IRS imposes, it is due, if the due date falls on a weekend or a holiday, then it is due the next business day. Okay. There is a separate schedule if the employer has operations in multiple states and is subject to SUTA taxes in multiple states as well. And we'll take a look at what that Schedule A looks like. What did I say here? Yeah, okay, so they talk about the IRS address to send it to. These addresses change every year, by the way. So there's usually, and I'll show you on the voucher that is used to send in any payment, it's indicated what address needs to be used. There can be an extension of time to file if that 1 month period is not enough in order to get that filed. However, with every extension that the IRS grants, it is an extension of the time to file the form, but it is not an extension of the time to pay the tax. So the tax is still going to be due by the due date. There is a corrected form that can be used, just like with the Form 941. If you make some sort of mistake on the form, you can amend it. Filing amended forms for payroll taxes they create a lot of complications. So it just makes it really, really difficult, because usually if there's a mistake in one place, there's going to be a mistake on W-2s, on W-3, on 941, so you're going to be filing all sorts of amended forms. But there is the possibility of filing an amended form with the Form 940. So let's take a look at, let me get that out here, what the Form 940 looks like. You see, it looks very similar to the Form 941. All the identifying information goes here, employer ID number, address, and all that stuff. Except over in this box, remember with the 941, we've got the 4 quarters listed. Which quarter are we filing for? Well, this is an annual form, so we don't have a quarter that we have to choose. But we've got some different options for the type of form that we are filing. So the very first one up there is an amended 940. So if you're filing an amended, it's not a special form that's filed. It's the same form, but it has to be marked as amended. Successor employer. So if one employer has purchased the business of somebody else, so probably the most famous one right now is Elon Musk just bought Twitter, right? He is a successor employer. Same business, probably operating under the same employer identification number, maybe not. A lot of the same employees, at least the ones that are still currently employed, but he would be a successor employer to that company. So he would mark, whoever he's paying to do it would mark that successor employee. If no payments were made to employees in 2021, you still have to file the Form 940 if you're continuing operations. So maybe you just didn't have any employees during 2021, but you're still continuing operations and you expect to have them at some point in the future. Box C, no payments were made, but you still, like I said, you still have to file this so that the IRS knows. If it's a final 940, so in that case, we're closing down operations, and the IRS, this is telling the IRS you shouldn't expect to receive any more Form 940s from us. Then you would click on that fourth box there. All right. So first part here of part 1 of the 940. Tell us about your return. Okay, so part 1, if you had to pay state unemployment tax in only one state. So remember I said for multiple states you're going to file a Schedule A. Well, this is saying no, we're in one state, so we don't have to file that Schedule A. You would list here the abbreviation for the state. So for example, Iowa, IA, Arizona, AZ, California, CA. Whatever the abbreviation is, they do have a list. I think they do have a list in the instructions if you don't happen to know what the abbreviation is for that particular state. If you had to pay state unemployment tax in more than one state, you're a multi-state employer, check here and complete Schedule A. Okay, So for more than one state. If you paid wages in a state that is subject to credit reduction. So this is statewide. Remember, that was one of the criteria or one of the factors that could influence whether or not an employer receives that full credit, that full 5.4% credit reduction. So if you were in a state that was not entitled to that full credit reduction, you have to check here, and that would be another reason to file the Schedule A for the Form 940. Now, down here, and we'll look at the Schedule A here in a minute. Part 2, sorry, scrolled too far. So now, determine your food and tax before any adjustments. Total payments to all employees. List all those, the total payments, chances are that's going to be the same as your box 1 wages or line 1 wages on your box 1 wages on the W3, the total amount for all employees. Payments that were exempt from food tax. Okay, so this is separate from the wage base, amounts over the wage base. There's a separate line for this. This is just if you made payments to any employees that actually weren't considered taxable payments for food and tax purposes. You would enter the reduction there. And what type of payments were these? So fringe benefits, regular life insurance, dependent care, that sort of thing. So if there were any amounts like that, they would be included in box 4. So that's going to reduce the amount of taxable wages that we're listing in box 3. Total of payments made to each employee in excess of $7,000. There's that $7,000 wage base right there. So just keep in mind, these are 2 separate reductions in the amount of taxable wages. Okay, and then we're going to, and by the way, these IRS forms, the instructions are always there. You just have to read very carefully each of the lines. Okay, they're always there on the form. At least it tells you how to do the math on there. So subtotal, line 4 plus line 5. All right. These are the total reductions, the total amount of those wages that are not subject to food tax. Right? Line 3 minus line 6. So now we're arriving at what the taxable wages are for food and taxes. And then our food and tax before any adjustments. There's that 0.006. In this part, they're assuming that the employer is entitled to the full credit reduction. Down here, under adjustments, this is where we would take into account any limitation on that credit reduction, on that 5.4% decrease in the tax rate. Okay, so we figure out what the food and tax is. So for example, let's fill this out a little bit. Let's just say if it's just a regular 940, there's nothing here you're going to check. Okay, it's not amended, it's not a successor, doesn't meet any of those criteria. So let's say IA, if you had to pay state unemployment, okay, we're not going to check that because we're not going to complete Schedule A. Well, we will eventually, but not right now. If you paid wages in a state that is subject to the credit reduction, we didn't. It's only in Iowa, and Iowa is not subject to reduction of that credit. Total payments to all employees. All right, let's just make something up. 70,000. Those are the total amount that we paid to employees. Payments exempt. Okay, so let's just say we paid some fringe benefits and those amounts are exempt from food tax of $10,000. And then we look at what we paid each employee and determine the amount of payments that were over $7,000 for each of those employees. All right, so let's just say, make something up here, 25,000. We're over and above the 7,000. So we'll add those up, $35,000. Total food and wages, taxable food and wages, line 3 minus line 6, 35,000. And then we're going to multiply that by 0.006. So, calculator up here. Oops, too many zeros. $210. All right. So this is our FUTA tax before any adjustments. But remember, if we're an employer that did not make our SUTA payments on time, we're going to be subject to a reduction of that credit. If all of the taxable FUTA wages you paid were excluded from state unemployment tax, multiply line 7 by 0.054. So this is as well, if you, and I don't think there are, if I remember the list, there really aren't any states that have a wage base less than the federal wage base. But if that were the case, we would, then we would also lose our credit reduction in that case. Now, if some of the taxable FUTA wages you paid were excluded from state unemployment taxes, or you paid any state unemployment tax late, after the due date for filing for 940, enter the amount from line 7 of, there's a separate worksheet where you would indicate that. Well, for us, we'll say we went ahead and filed everything on time and paid everything on time. We're not subject to a credit reduction. So we do not have to, as it says here, if it does not apply, leave it blank. So for our case, we're going to leave that blank. Now, total FUTA tax after any adjustments, these would be our adjustments, $210. How much was deposited for the year? Now, we're going to get into deposits here in just a second, what the deadline is for deposits. But in our case, we're going to say 0. We didn't have to make any deposits during the year. So here's our balance due, $210. And that's how much we're going to send in. Now, there's this other part here. Let's say this was 170,000 and this was 135, which would make the 210 over $500, $810. Okay. This is important. If we get to over $500, what happens is we are supposed to have paid our FUTA taxes on a quarterly basis, starting in the quarter that we reach that $500. Okay, so if we owe, just like the 941 and everything else with regard to the IRS and when they want their money, the more you owe them, the faster they want their money, right? We learned that with our deposit schedules for the 941. So, if the amount is over $500, then we should have already made most of our payments. All of our payments except the one that's due in the fourth quarter. Okay, so we would have, let's say we deposit $610 in those 3 quarters. So it says right here, so if line 12 is more than line 13, enter the excess on line 14. We owe $210. If line 14 is more than 500, you must deposit your tax. If line 14 is 500 or less, you must pay with this return. So you've got a separate deposit requirement once you owe $500. If for the whole year you owe less than $500, then you can pay it with the return. But once you reach that $500 point, then you have to start making that payment on a quarterly basis, and you have to make it electronically. Okay, so in our case, we'll say, so line 14 is, enter the excess. If line 12 is more than line 13, enter the excess on line right there, 210. So we don't have to make that last payment electronically. We can pay it with the return. Okay. So let's, if line 12 is more than 500, which it is, it's $810, then we have to fill this in and determine what our liability was in each of the quarters. So we'll say in quarter one, it was 200. So that means if our liability in the first quarter was $200, we wouldn't have had to make any deposit in the first quarter, right? Because it hasn't reached 500 for the year. Once we cumulatively reach 500, that's when we're gonna have to make that deposit. Second quarter, again, $200. That means, once again, we don't have to make any deposit yet because we have not reached 500 for the year. We're only at 400. Third quarter, 200. Okay, now we have reached $500. That means that in the third quarter, we would have to make a deposit of our FUTA taxes for the full year. We have to deposit $600. So we can no longer hold on to that money and just deposit it at the end of the year. And then the fourth quarter, we'll say 210, total tax liability. So this must equal line 12, which is the amount here. As far as the form itself, that's it. A little less complicated than the 941, but remember we've got a Schedule A that we also have to take a look at if we are required to fill it out. Let me see here, they don't have it here, I'm gonna have to pull it up separately. This is the voucher that would be filled out. Like I said, there's the addresses, the address that you would send it to the address provided in the instructions. Okay. So there are, you'd have to go online to the IRS. Like I said, they change these addresses frequently. Sometimes it's Kansas City, sometimes it's Ogden, Utah, sometimes it's Austin, Texas, different service centers. So let's look at the Schedule A. 940. Okay, so this is what the Schedule A looks like. Again, EIN, business name up here at the top. Place an X in the box of every state in which you had to pay state unemployment tax. For the Virgin Islands, enter FUTA taxable wages and reduction rate. I think there is VI on there. Probably Puerto Rico as well. Yeah, Puerto Rico, Virgin Islands. Multiply the FUTA taxable wages by the reduction rate and enter the credit reduction amount. Don't include in the FUTA taxable wages box that were excluded from state unemployment tax. Okay? If any states don't apply to you, leave them blank. So if you were a multi-state employer, let's just say, and I think you've got a problem that is multi-state. So let's just say Iowa and Arizona. So we would go back to here, where are we? Let's take this out, take this out. Had to pay state unemployment tax in more than one state, yep. Okay, but we're not subject to any credit reduction, all right? So our total payments, 170,000, would need to be the same as our total payments over here. So, and I can't fill this out. However much in wages that we paid, our FUTA taxable wages, sorry. So this amount, this 135, would need to be then divided between the two states. And I can't, this is not a fillable form, so I can't put it in there. But then all of that would then be indicated. Now, if there's no reduction, there's no reduction, right? None of these states have a reduction. It doesn't apply to us. That's fine. They just want to know what states we made SUTA payments in. Here's your list of abbreviations for the different states. And then they've also got an example in the instructions there. All right. Questions about the Form 940? who signs it? If it's a sole proprietorship, so just one person owns the company, the owner of that company would probably sign it. Principal officer that is eligible to sign it has the authority to sign it. Any member of a partnership, so partner in a partnership, or a fiduciary if it's a trust or an estate. So as I had already mentioned, when do we make these deposits? So we deposit quarterly once we reach that $500 for the year, the cumulative total for the year. You pay before the last day of the month following the end of the quarter. Well, it should be actually by the last day of the month. So the last day of the month is when that would be due. If it's 500 or less, the employer can wait and add that total amount to the next quarter. If they never reach the $500 during the year, then they don't have to pay it until the time that they file the form. Okay. The 940B is the voucher. I showed you that. It's pretty simple. There are penalties for paying late, or for filing late, or for not paying the total amount that's due. All of that. Or if you were supposed to make the deposit during the year, but you waited until the end of the year. So your cumulative amount was more than $500, but you didn't pay it during the year. That would be another cause for penalties. All right. Let's take a look at the Iowa form real quick. If I can pull it up. Sometimes it's hard to find. But so this is what the form looks like for the state of Iowa. It's called the 65-5300. This is a quarterly form. So unlike FUTA, you do have to file this on a quarterly basis. Even if you don't owe any tax, SUTA tax, you still have to file it. Remember, our wage base is different for Iowa, so our taxable wages are going to be different for the state of Iowa than they are for the federal government, right? So that calculation is going to be different. It shows you right up here. Now, normally what happens is you do this online nowadays. You don't actually fill it out on a paper form. Once you apply for an unemployment tax number, they give you that account number, and all this stuff is already pre-programmed into the online form. But the online form essentially looks a lot like this, has all the same information. So, filing quarter, January, February, March, due date is April 30th. April, May, June, due July 31st. So again, by the last day of the month following the end of the quarter. FEIN, that means Federal Employer Identification Number. You might have a different state identification number. They want your federal EIN. All of the information about your business, here, address and everything. Total wages. Normally what you would do is you're actually going to start on page 2. This is where you list every employee and how much they made during the quarter. So enter the wage information for each employee as well as their social security numbers. So, and to get credit for taxable wages paid in another state, you must file this report online because they've got the feature that allows you to take that credit. The problem that I wanted to go through in your homework has to do with an employee who received a credit in a different state. So just kind of a heads up there. So total amount of, so you would list each employee different here. 1, 2, 3, 6, 7, 8, 9. Mary Smith. Whoops. Total, remember we've got our state, and this one isn't set up on an annual basis, so I can't. What was the wage base for Iowa, you guys remember? So wages paid, say it's 40,000, and then the taxable wages paid, how much was subject to the taxes? Was it, does anybody remember off the top of their head what Iowa's was? No? You're not memorizing that information? Yeah, I can't quite remember either. Let's see. Iowa. At least in 2021, 32,400. So, and we'll say this is for a quarter. Down here at the bottom, and then everything is summarized on the form. And then they want to know as well the number of employees who worked or received pay for the pay period that includes the 12th of the month during each of the months of that quarter. A couple other questions. So the amount of pay which exceeds regular and recurrent payments to employees such as bonuses, executive pay, severance pay, etc. So any amount that they received over and above whatever their normal pay would be. And then, if there was a big difference in any of these 3 months, a big increase or a big decrease, they want to know why. So, seasonal change, so think about agricultural employers. Obviously, in the summer months, they're going to have greater numbers. In the winter months, they're going to have lesser numbers. Same thing with the construction industry, that sort of thing. If there were layoffs, recalls of individuals who were laid off, they want to know why. So all of this transfers over. We'll just say we have 32,400, and we'll say we just had one employee. So 32,400. So total of all wages, that's our 40,000. Taxable wages. State experience owed, line 2 times the experience rate. Now the experience rate would be listed over here. Let's just say it's 2%. And we're not going to have anything there. No surcharge. So line 2 times the experience rate. $648. Will not have anything there. No surcharge. Contribution owed, $648. $648. We didn't have any amounts from the previous reports. No credits. $648. Oops. And we're going to pay $648. Okay, they've got a list here of if you are late in paying, how much you need to the penalty, whichever is greater, $35 or the total amount of wages times whatever this rate is. So any penalty would be listed there, calculated and included, as well as any interest that might be due. Okay, so that's the Iowa form. Whoops. Any questions about that? Again, each state's going to have their own. I would assume all of them are online filing. So at the same time that you were filling out the quarterly 941s, you'd also be filling out the state unemployment forms. Okay. And then it would be paid on a quarterly basis. There's no, at least for Iowa, you pay what you owe. If you owed $1, you pay the $1. So there's no cumulative amount that you need to reach before you start making payments. You start paying immediately once you are due, once you owe that money. Let's see. I already showed you kind of this stuff because this is regarding SUTA. Again, those payments, failure to pay, late payment, failure to file, those would apply at the federal level as well as the state level. Record retention, each state's going to have their own requirements for retaining records with regard to unemployment. So again, partial. There is such a thing as partial unemployment. So if employees can be eligible for unemployment benefits even if their hours are cut. So they were full-time, 40 hours a week. The employer didn't fire them, but they've been cut down to 20 hours a week. In those cases, oftentimes they would still be eligible for some partial unemployment benefits as well, if it was reduced through no fault of their own. And you'll see, so the name of this is this form, Employer's Contribution and Payroll Report. So, all right. Okay, so that's it for our chapter. In summary, so we talked about who is an employee and who is an employer for purposes of federal unemployment tax. We talked about what are considered taxable wages for both federal and state unemployment tax. We did some calculations on that. We talked about the credit. Remember, I want to drive that one home. That credit, 5.4% credit against the tax rate, not against the tax, but against the tax rate. However, certain requirements have to be met in order for employers to receive that full credit. We discussed how that the rates used by states are determined based upon how many claims have been filed against that employer, right? And that is that's why they call it their experience rating. What their experience has been with employees filing claims. The higher the turnover, the more claims there are against an employer, the higher their rate is going to be, just like any other type of insurance. We looked at the FUTA, the 940 for FUTA, and we also looked at the form that's used in Iowa. So before we get to any homework questions, are there any questions about the slides or the lecture? Anything like that? Okay. So that said, I know there is one problem in particular that I want to start out with, and then if you guys have other questions, we can